How are things for you guys over at Standard Chartered? They look pretty solid.
Hi, Steve. Yeah, I think they are. We've had a really nice start to the year, 2 consecutive quarters now of double-digit growth, and we've updated our guidance for the full year to be around 10% for the full year as well. Some of that is about rates. A lot of that actually is just about underlying client demand, particularly in the Asian markets in which we operate. So that, together with another $500 million buyback, brings our total buybacks this year to $1.25 billion. We're very pleased with the start to this year. Very pleased.
Yeah, and look, I mean, everyone is. I remember a phrase from Jim O'Neill a few years ago. I mean, I'm going back, at least a decade, where he said everyone's looking under every stone to see problems in the Chinese economy, but when they turn those stones over, they're not necessarily finding anything. Now, we know there are a lot of structural issues in the Chinese economy. Some we're worried about, others not. But you've just turned in your best ever half-year income performance, I think it is, in China as well. Tell me a bit about China specifically. How are you doing that, and what are your concerns?
Yes, so we just announced, as you say, our best ever performance in China. Income there is up about 6%, which in the context of what's been going on probably would be a surprise to people. I think the biggest factor in it is that we're specialising in one part of banking, particularly cross-border. And actually, in terms of the Chinese economy, whilst the local domestic economy has been a bit flat, actually the exports have been strong. And that has played absolutely to our strength. That's what we do. That's what we enable our clients to do. And off the back of that, that's why we've printed, a really strong set of numbers. We do feel very, very positive about the outlook there over the next several quarters, indeed probably several years as well. So contrary to some of the gloom and doom you hear, actually China for us has been a real bright spot.
Which means that you can look dispassionately at the property market, or semi-dispassionately, and just say, this is what I see going on, this is how I see it panning out. Can you just tell us what you think about this property market? Because literally still on a weekly basis, Andy, I'm seeing some quite worrying headlines.
Yes, the steps that were taken a while ago to sort of dampen some elements of the property market have clearly bitten quite hard. And all the stats show there's been a huge slowdown in the sector. We've been quite thoughtful about where we have got our exposures. Generally, we've gone with the higher quality developers. We have taken some reserves for some exposures there, but in the overall scheme of things, for our group as a whole, they're not significant. There's clearly, even in the most recent days, been announcements of new funds being made available at much lower cost to help that sector get up on the ground. Our sense is there will be a big push by the government to do that. It's a very important part of the economy. And as they seek to get the overall economy moving, and particularly going into next year, having the real estate sector, back and operating normally, I think is the key part to that. So we sense there will be government support for that. It's happening. And over a period of quarters, that should start to come through. And then we'll be back to a very, very, very big economy growing nicely through next year again after a difficult period during this year and last year.